around me. It keeps bringing me joy. Each new blessing I receive, it keeps bringing me joy.
Welcome back to TradeDelicious Live. It's morning briefing. It's 8:30 a.m. Let's get into a little bit of morning briefing. This is a show where both John and I, we're going to debate different positions. We're going to talk about some of the fundamentals, and we're going to get you up to scratch with everything that you need to know. It is morning briefing. It is Monday, the 17th of June. Good morning, everyone, and welcome in. It's just gone 8:30 a.m. British Standard Time. So I'm assuming most of you are in Britain or Europe. So if you are, a very good morning. We haven't had our weather report come in yet, so I'm going to wait for our weather report to come in. But how are you doing, John? Good morning to you.
Yeah, I'm doing really, really well, man. Doing really well. Obviously, England won yesterday, so we're all happy at this end. Bit of a shaky one, like we just spoke about, but we've got to take it on the chin. We can't be negative. This is what England people do, English people do, don't we? We're very negative people in general. We're like,
Yep.
we did well, we won, we've got 3 points, but there's always a
But
but. Yeah,
I think
there's
that's where I
always,
get it from. I think I
yeah,
generally, I think that's where my perfectionist comes in. Yeah, that was really good, but it could have been
but
better.
yeah, it could have been better.
Yeah.
Could have been better. We could have, we
But
could have, we
I
could
think
have
that's
rolled
how
them
we
over, but we
all,
didn't.
yeah, that's how we all look at the economy at the moment, right? Some of
Yeah,
the data coming out, we
absolutely.
go, it's good, but it could be
But
better.
yeah,
It could be better. I hope you've all gotten away from the weekend. Paul's just popped in. I've got the weather report. Breaking news. Warm and sunny Essex with clear blue skies, and it must be that good because he's added not a cloud to be seen.
Oh, nice.
Wow.
Nice. I can't
You
say
got
the
the
same. Again, I don't think I've looked out the window this morning. I ain't gonna lie.
You've been up
And
since
I've just
5.
realised as well my light isn't on, so I'm just gonna if I get blinded here. Right, okay, there you go. Now my light's on.
Monday morning blues, eh?
Here we go. Yeah. It looks a bit better.
I love it. I love it. No, good morning to everyone. Misha, Musclay, Michael, you're all popping in. Musclay has actually chucked us a quote of the day. You ready for it? This one's coming out of Tom Hopkins, a bit of a long one, but he started the quote before he's even sent the quote, saying, "Good morning, all, to the best day of the week, Monday." I think Monday's the best day of the week. Someone likes his job.
Must do, yeah. I like Mondays. I
You
do
like
like
Mondays?
Mondays. I do like Mondays, yeah. I like Mondays because I feel like I get to reset, refocus, go
Mm,
again. I do feel like it's a fresh
go
start on a
again
Monday.
attitude.
Yeah.
I
Go
like it.
again.
I
Like
like
if
it.
last week
Haresh
was
is
bad, you can just wash it away. You're back in. You're in a new week.
yeah, okay, now I'm starting to understand. Haresh has popped in with a wave. Good morning, Haresh, as well. All right, quote of the day coming out of Tom Hopkins. I'm not judged by the number of times I fail, but by the number of times I succeed. And the number of times I succeed is in direct proportion to the number of times I fail.
I like that. That's
Process it.
very these are very apt for trade. I always feel like quotes are very apt for like trading, isn't it? Like because you fail so often and then you fail forward is what I like to always say. Fail
Yeah,
forward.
that's a good one. That's a good one. I used an analogy earlier with a member of our team: 2 steps forward, 1 step back.
Mhm.
Every win's 2 step forwards. Every loss should be 1 step back.
Yeah.
But so many people get caught in that 1 step forward, 2 steps back. And it's a bad spot to be in. But I like it. Joshua is popping in as well with a little wave. So let's get into it, shall we? Let's talk about Monday
Let's
morning
do it.
briefing and everything that you guys need to be up to date with today. Mixed data coming out of China this morning. It's left the Aussie dollar quite lower. If anyone's looked at the Aussie dollar charts recently, this morning we did have a little bit of a sell-off in the Aussie dollar. Now I'm interested to see this data because when I say mixed data, I really do mean mixed data. So we had growth in retail sales, which is obviously showing the economy is being a little bit stronger on the ground. In particular, I'm going to dive into some of the numbers and where we're seeing growth in those retail sales. But bad reports coming out of production, which is obviously one of the
Mm.
largest
Yeah.
economic pushes of China. So
Of China, yeah.
the condition on the ground seems to be getting better, but their output, which is their moneymaker, seems to be getting worse. So it's a really
Mm.
mixed data, and that's why the headline is mixed data out of China. But investors have seen that as a downside, obviously, for Aussie dollar, because if production's not there, they don't care about Chinese retail sales. They care about
Yeah.
the production. If the production's not there, that means the demand for the minerals in order to create that produce isn't there for the Australian dollar. So we've seen a bit of a sell-off in the Aussie dollar from that. But I wanted to touch on a few things out of China today. Now, John, you'll remember we touched on a Chinese housing market play a few weeks ago. Do you remember having that conversation?
Yeah, I do. I do. I was still waiting
Well,
for your report on what I should buy and where I should get in.
well, guess what? It's here.
You got it. You got it.
It's here. Now, what I don't have a trade yet. I don't have a trade, but I do have a confirmation.
Okay.
We've seen from the data that's been released today, China's new home prices have fell at the fastest pace in over 10 years. They're
Wow.
down over the year, down just under 4%. So if you bought a property this time last year, you're looking at it now being down 4%.
Negative.
So many people, especially in Western countries, are used to just property always going up and you get that 1%,
Yeah.
2%, 5%, 10% growth. China's experiencing the opposite. And this is including government efforts to rein in oversupply and to support debt-laden developers. They have been extending debts and payable debts to these developers so they can continue to build these homes and build these houses to drive or at least supply the demand. But it seems
Yeah.
like the demand's not there. This is really starting to get closer to them bringing in that floor that we
Yeah.
discussed. If they want to bring in that floor, they will. The data that's printed today is closer to them bringing in that floor. So speculation, maybe if play a couple of weeks ago, following this data, it's getting a little bit more real. It's getting a little bit more real. So I've been doing some research, haven't found the one I want to invest in yet, but I'm looking for maybe some ETFs or some individual companies that's directly exposed to the housing market in China or invests in the housing market in China. They should be at all-time lows because the housing market is doing ridiculous. So they should be really cheap to buy, pennies on the dollar. And in the
Yeah.
event that the Chinese or the CCP do introduce the housing market floor. Quick recap of what I mean by the housing market floor. There's been hints that the Chinese government is going to come in and buy all of the unfinished properties or the properties that are not selling for a set price. They're going to come in and they're just going to buy it up from everyone. The government's going to buy it up, creating that demand. And in the event that the government do that, that essentially builds a floor because even if you invest in a property and it drops in value, you can just sell it back to the government at that price. So it creates this bottoming effect, which a lot of investors will see as a risk manager or a stop loss, so to speak. So they'll come in and they'll invest in property because worst case, they sell it back to the government at around the same price they got in. So
Yeah.
it's incentivizing a lot of foreign investment into this property market. That's what I want to be exposed to. And that's what I want to see. Don't know how to yet, but very interesting to see that's come in. Quick little touch, because I know a lot of you guys won't care about China, but this does affect the Aussie dollar quite aggressively and world economies, especially looking at oil situation at the moment. Oil and foods up 9.3% from 5% in sales. We're looking at some of the biggest growth being in home appliances across China. Was 4.5% growth last month, up 12.9. So it's not just beat expectations, it's walloped expectations. So
Yeah.
no one's buying new homes, but everyone's buying new
But
home
they're buying new.
appliances. So that's interesting to watch. Communications equipment, things like phones, heading up as well. What's really interesting is the clothing has gone up. Clothing in China, people don't tend to really care about. Up 4.4%. Office supplies down. Well, cars down 4.4%. So cars still
That's a big
not
one.
really getting out.
Yeah.
Considering BYD, Build Your
Yeah.
Dreams, right? The Chinese EV maker, which is currently taking on Tesla. I'm just going to say it, that's a horrible car. They look
Yeah.
fantastic, but they're so cheap. They're plastic. It is horrible. However, it's cheap. It's affordable. They're taking on Tesla. Euro sponsor. You mentioned the Euros this morning. I've noticed they are the EU sponsor. Phil Foden's posting pictures in these cars. You can pick up these cars 20,000 Aussie dollars, 30,000 Aussie dollars. That's looking at 15 to 17,000 US dollars for a brand new EV. They've really taken that market by storm. What's interesting is Chinese people don't believe it.
No, no, that's interesting as well because there's a BYD that's just opened up the road for me.
Mm.
Um, and I do like their sort of their tech. I don't know if you've seen one of their techs where it replaces the battery if you're going on certain journeys. So you can almost park into a garage, a robot will come, take the battery from underneath the vehicle, and then give you a new one. So it's almost like instead of like either charging or let's say you were using it around town, but you wanted to then do a long journey, you could then upgrade your battery on the fly and then drive. I thought that was quite interesting to see. That's quite incredible tech if that is where they're leaning towards and where they're going. But someone needed to take that market. I think there was a lot of EVs are very expensive. I mean, if you look at the second-hand market of EVs, though, oof, they are falling through the floor.
Well,
They are.
yeah, this is the problem with EVs, and this is something I've always addressed is they're new. Right, we've had
Mhm.
hybrids for a long time, but EV solely reliant on the battery. It's new.
Yeah,
Teslas, BYDs, the new Porsches, whatever all electric car you're looking at, the new Mercedes, for example, they're using F1 technology, which is awesome. How long do the batteries last? And that's a
yeah,
question no one really has an answer for. And the
no,
only way you're going to get an answer is by testing it. So my theory is, hey, 10 years time, when all these batteries start dying and you realize it costs $15,000 for a new battery, are the EV markets going to be as attractive as what they currently are? And you say the secondhand car market, if that battery starts dying, that is your car. And it's
yeah,
not, it's literally like you have a petrol engine having to get a brand new gearbox and new engine every 10 years because the battery dies out, if it is 10 years, right?
yeah,
I don't know when it is, but that's the thing. We've got estimations. We don't know how long these batteries are really going to last. Now, I don't know if you use a laptop or anything, but after a few charges, you notice your laptop battery does half of what it actually is supposed to do.
yeah,
These things are built up of the same technology on a bigger scale, a little bit more improved, but it's the same technology nevertheless. So it is going to be interesting to see how well the secondhand car market can handle these and whether or not people can afford to get new batteries through, what kind of
yeah.
availability that is, what kind of warranties are going to cover it, and then what you're going to do with the batteries once they're dead. Where are they going? How are you disposing them? EV market is, hey, we're all eco-friendly. Where's that battery go?
Yeah, that is a good topic to probably explore a little bit further in the future. I think definitely because all those questions there are valid questions to ask. But yeah, it's almost like the tech around. I don't know if anybody in chat has an EV. I don't know what their experiences are. Let us know if you do. But the idea around sort of long journeys is always the thing that puts me off. Having to stop half an hour to charge your battery before carrying on somewhere else. I mean, that just doesn't appeal to me. I do quite a few long journeys down south, at least once a month. So for me, I'm still a diesel guy, but
What's a
uh,
what's a long journey?
what's a
I
long
want to,
journey for me is probably
yeah,
nothing to you.
yeah.
Sorry,
That's
nothing
I
to
want to
you.
know what's a long journey in your eyes.
Well, like a 3 hour journey is a long journey to me. I don't know how many more that would be down south. It's usually around sort of, I don't know, 120, 150 mile, I reckon, maybe.
Okay, that's decent.
Yeah, I think that's
Yeah,
a decent run.
yeah. Sorry,
I
I'm
don't know
not
about you. I don't
teasing
know
you.
about you
I'm just
because Australia is vast. So,
I'm just curious. Like, no, 3 hours is a decent drive. That's a decent drive. Like, if I'm traveling 3 hours, I won't want to do it in one day. I'd want to stay overnight, right?
Mm,
If I'm doing a 3 hour, 4 hour drive. So no, that's fair. That's a long journey.
yeah.
I agree.
And I think, yeah, the thing is as well, you've got a lot of people nowadays that use their vehicles, you know, to travel abroad,
Yeah.
the situation with airlines has probably helped influence that a little bit as well in terms of people using their cars more. It's an interesting market to look at, especially with regards to China and the data. They're big on production, big on car production. If they're not producing as much, what is that telling us? The
Yeah.
production's down. What is that really telling us about the car market?
I've just seen Michael's popped in chat as well saying, curiously, EU have also smacked a 30% fee on import of Chinese EV cars to Europe. And on top of that, I've just been sent a message from Alex, who sent me a headline from, I think, BBC, breaking news right now, saying China
Oh,
launches anti-dumping probe into EU pork imports. So Is there a bit of a tariff war going on between the EU and China right
Maybe.
now unfolding? Potentially, potentially. It looks like there's some interesting plays happening right now.
Yeah, definitely. China's look, China's a big market, right? China is
Of
a
course.
massive,
Yeah.
massive market, and a lot of countries are going to want to try and charge them for that.
Oh,
For
yeah.
the, you know
Yeah.
what I mean?
That's money.
They want to benefit. Exactly, it all comes down to money. So they're going to whack tariffs on them. Of course, they are. You know, it's they're not going to want to miss out on any kind of money. And if they
No.
start dominating the electric car market, as they probably will, you know, Tesla's opening.
Arguably already are. I think they're
Yeah, already
walloping
are. Yeah,
Tesla on sales at the moment. Like there's a big
exactly.
problem in Melbourne at the moment that there's so many Teslas have been delivered and they've taken up this whole area at the docks, but they're not
Really?
selling enough to actually move them now because there's a BYD. Every third car is a BYD.
Mm,
They've just it's like when China bought MG. And they did the same thing. They really focused on the design of the exterior of the car. They look fantastic, right? When you get in the interior, it's all plastic, it's rattly,
yeah,
it's cheap, the engine's weak. Yeah, there's not much quality in there, but it looks good. And then they
yeah,
price it. You can buy a brand new one, $17,000. It's like that's
yeah.
cheap. Like everyone can go out buy a brand new car with cash. This day and
Mm,
age, that is so rare for people to do that.
yeah,
They've done the same thing with the BYD. You see MGs, you see BYD everywhere because people can afford it and people are willing to drop on that quality to get that new car and to feel not in debt or financially good. You buy
yeah,
a new Ford or a new Toyota, these really reliable ones, you're looking at hundred thousands of dollars. It's like, hang on,
yeah,
how did a Ford Ranger end up being $110,000? I don't know, but it's there. And that's the
yeah,
situation. And yeah, China's taking over this whole car market like that. They're saying, thank you very much. And you're right. World governments are going to go, hang on a minute, you're going to make billions from this. We want some.
yeah, yeah. Definitely, definitely. Interesting play though. I like the idea of the play there. How will this impact the Australian dollar though? Is going to be interesting as well. Aussie's been on a good run, and we've got an RBA meeting coming up this week as well. And obviously, your analysis on the GDP situation is brewing a little bit of a storm, I think, actually.
Yeah. I hate that I'm right. Yeah,
Yeah,
you ever feel
it's
that way?
horrible
Like
situation. Yeah,
I'm
yeah, yeah.
confident. I'm confident I'm right, but it's not a nice situation.
No,
It's not what and I live here. That's not how I want my economy to be.
no.
But yeah, no, it is brewing a storm. People are catching on to it now. I even put a little short out on YouTube talking about it, and it got a lot of a lot of economists chatting about it. I'm hopefully, fingers crossed, I've got the opportunity to meet with the chief economist at HSBC on
Wow,
Thursday morning, and
that'd be incredible.
that's the question I'm throwing straight away.
Yeah,
I don't even know if I'm allowed to ask questions, but you best believe you're not going to throw a question that way, and that's the
yeah,
question on
100%.
the tip of my tongue. But I wonder if they look at it the same way we look at it. But I'm getting to the point where I'm starting to think interest rate hikes are more likely than cuts. I
Hmm.
really am. And that's alarming because our GDP is not printing very well. Should that be the case? I've just frozen up a little bit there. There you go. I'm back.
No, you're good,
Should
you're
that
good.
be the case? I don't know. It's hard to watch. Anyway, let's chat about the Bank of Japan.
Yeah.
You had some plays on it looking at the bond buying action.
Yes. So obviously last week they're kind of disappointed. They didn't really say that they were going to do much. This is Aussie dollar chart. Let me go down to dollar yen for you. Yeah, I really liked. There's a situation brewing out right now, kind of globally, isn't there? I think if we look towards sort of what happened towards the end of last week, the market definitely shifted in tone. The risk off sentiment definitely kind of came back to the market. The stronger currencies were the yen, Swiss franc, the US dollar. Um, and then we've got this situation now where the Bank of Japan are planning to wind down that bond buying program, but potentially in the next meeting in July. So we've got this situation where they're gonna do that. They've said that they're going to do that. There is this growing storm within the EU politics right now, which is causing some turmoil within the markets. Is the market now going to start pushing risk off? I was looking at the volatility index, and the volatility index hanging around those sort of 12% areas, the real lows. And if that starts to climb significantly, then the yen, the safe haven play, I think's the one that I'm going to be looking for. We touched on it a little bit last week, obviously, because the BOJ was there, and we talked about sort of shorts on different markets like pound yen, euro yen. We talked about, and those have declined quite significantly from last week. And I'm still looking for that play. I think now the Japanese yen to me is one where I think people will be looking to kind of try and invest into. Whether we see that necessarily on dollar yen right now might not be the play. But if we go and take a look at some other markets instead, I'm talking like your Aussie yens, could be a good play for some downside pressure. Especially the pound yen, euro yen. Pound yen, I really like the idea of being on the short side of. Inflation this week potentially coming in at 2%, which is bang on targets for the Bank of England. That's potentially going to lead to the idea that the Bank of England are going to cut going forward. So there is a play here where you could try and benefit off the two sort of differences there. So I do like pound yen. I mean, don't get me wrong, last week I got stopped out of £2 yen trades going short. So I was in the right direction, but the volatility just kind of took me out. And sometimes that's the way the cookie crumbles. But I'm still happy to look for some short ideas here. I'm looking at the sort of 30-minute chart here, and we're building up some volume in and around this area. So if there's a decent sort of breakout to be had, I think we could see another leg lower. I'm kind of targeting these lows around about the 197.75 handles. I think we can try and trade back towards this level, in my opinion. So if we get any kind of build up in volume here, there might be a chance for like a break and a retest opportunity in and around this area. That's what I'm kind of eyeing up at the moment. I think if we broke any kind of higher, or we were retesting around this sort of 200 and kind of failed to break higher, that would also be a good play for me.
I like the technical setup. I like the value in being in the Japanese yen, but I want to challenge you a little bit in a very gentlemanly way, right?
Okay.
You've addressed there that you feel like obviously if the VIX climbs, we're going to move to some more of a risk-off foundation, right? Which traditionally are safe haven assets. We have a look across the board. I mean, on the year, gold's through the roof at the moment. Silver still on the year is put in some decent returns. If you look at even Swiss franc recently, US dollar Swiss franc, the pair is down about 4% or 2.8%. Actually, let me double check what actually that is from the highs. We're down 3.7% on the Swiss franc. So the Swiss franc's already found that strength. The gold's rallying, the metals are rallying. What makes you think this shift to safe haven assets hasn't already come, given we're seeing strength in Swiss franc, we're seeing strength in precious metals, we're seeing strength everywhere else, just not in the Japanese yen? What makes you think the VIX climbing is going to result to people thinking the Japanese yen is going to be safe?
So I think yen is the play. Yen is the currency that is seen as the safe haven. We talked about it before, where we're like, is it seen as a safe haven? But every time the market panics, the one currency that sees the most attention is the Japanese yen. I'm not saying the Swiss franc isn't a safe haven, but it's not as seen as a safe haven as compared. It's almost like the European safe haven, isn't it? So maybe that's benefiting a lot off the euro action right now. I'm looking maybe more of a globally. It's looking a little bit fragile at the moment. If we look at sort of the dot plot that we had in the US is now calling for one cut in by this year, maybe one cut maybe in 2025. It's
I've got to like search through the archive of where we were talking about this a year ago, and everyone was saying, we're gonna cut down like January 2024. And we were just sitting there going, mate, you're not getting any cuts in 2024. And we were ridiculed. I had economists telling me I had no idea what I was talking about. Here we are.
Yeah. Well, they're probably paid to say the right thing, aren't they? They don't want to make the doom and gloom, do they? They don't want to focus on that. They want to make everything's all good, because they're probably making money off the back end somewhere. But it's essentially, I think the yen is yet to really have its day right now. I think there's some pressure building. The market's tried to price in the almost like the perfect storm the market was trying to price in, I feel. You saw that the US data was coming down. They were like, yes, amazing. We're pricing in these cuts. And then all of a sudden the data started to shift and they're like, where do we go from here? Where do we go from here? And now nobody knows. Now it's all up in the air because now you're waiting for every print to kind of, is it going to match? Is it not going to match? And then that creates that uncertainty, I feel. And I feel like the market is now going to feel that risk. And I'm just, this is more of a gut feeling as well, to be honest.
Yeah.
I
Which is
just
part of your
go
edge, right?
exactly,
With fundamental stuff, you got to trade with a bit of gut feel. The answer isn't clear. If the answer's clear, it's already priced in. Right, that you've got no edge if the answer's clear.
Yeah.
You've got to have like that bit of either a gut feel or that willingness to gamble on said event happening, and that's where money's made.
Yeah, absolutely, absolutely. And I've also seen this morning, I was reading a report that a lot of the US banking sector are now kind of reducing their targets for like the S&P and things like that now. So they were calling it to go a lot higher, and now they've reduced down some of those targets. So I find that quite interesting as well. It's like, okay, are you starting to feel a little bit like
Yeah.
you're going to be really wrong here?
You mitigating?
Again.
Are you mitigating? Yeah. That's
Yeah.
interesting. That's it. Oh, I would like to see that because I don't even know how the S&P is trading at what it is today. But
We can have a flick over. We can have a little flick over if we've got time.
no, we've got. But I don't know how it's trading up there.
Oh yeah, essentially, yeah.
That's what I get. The price, like, fair enough, right? 5,400 we're trading around, but I don't understand why. But
We're probably
that's
going to get
just
that push. We're probably going to get that push. Usually, the saying is if your mate down the pub starts talking about a certain market,
yeah.
you should really panic. And I'm not. I'm not getting that yet. Well, and I get ironically, I get that quite a lot because of what we do. What we do, people naturally gravitate to something they see on the news. They go, "What do you think about this?" Then,
Yeah.
I had. It's like when my mates were texting me about Bitcoin when it was at the highs. They're like, "We've bought in." I was like, "Please do not buy in. Like at these prices, it's ridiculous. It's gone." It's almost like I guess I'm getting a lot of conversations about Nvidia. Right, I'm getting a lot of conversations of people asking me about Nvidia, and they don't know what Nvidia does. They don't know what Nvidia produces. They just know that it's at all-time high and it's grown exponentially. That's when I start to think, if you're talking to me about it, is this the time where that may be not, you know what I mean?
It's a great tell, right? Because nature of our job, nature of being in this business, whenever someone wants to make money or they've seen anything to do with the financial markets, heads turn. They look at you, right? They
Yeah.
look straight. Something pops up in the news. Oh, all odds index is up 0.3%. Bang, looking at you. What are you? What? How much money did you make today? That's kind of the question you get. And I
Yeah,
like to
yeah.
tell. I learned a very, very long time ago. I don't give anyone any advice. Whether they buy, whether they sell, I don't. I'll be like, awesome.
Yep.
That's a decision you've made. That's awesome. I'm proud of you. I'm glad you're investing. I'm glad you're exposed. But I don't tell anyone not to buy. I don't tell anyone if I would be buying there or that price. Because even if you give them the perfect advice, they'll lose money on it. They'll lose money on
I
it,
learned
right?
my lesson
So,
from Bitcoin. Yeah.
and that's Bitcoin's a key example. Crypto is a key example. I've had people that have bought crypto, and I'll be like, awesome. Look, I'm not interested in crypto. I don't buy crypto. You want to buy that crypto, go for it, have fun with it. They made a lot of money, right?
Yeah.
Almost all of them didn't sell
No. Yeah.
because it was going to keep going, right? And now they lost
Yeah.
everything
To the
that they
moon.
made. And it's just like, well, and they'll look back at you. If you ever give them advice, it's your fault.
Yeah.
It's
Yeah.
your fault.
That's
You go,
true.
John,
That's
you
true.
told me. You told me not to
Yeah.
no, I didn't buy Nvidia at the highs. It's just doubled in value. It might.
No,
Right.
no.
So,
I've got a business card with a disclaimer on the back.
I like it. Anything spoken over a beer does
Yeah.
not count.
Yeah. Yeah.
Yeah, I like it. I
That's
like it.
exactly what
But
it says.
oh boy, we've actually overrun the gun. Paul's just popped in a question. Jordan, are you still having the hedge fund guy on the show this week? I haven't been able to find one to talk about specifically. So I've asked Rich and Will the exact questions that they want to ask, and not who they want to speak to, but what kind of questions they want to ask. So I need to find the right person, because I don't want to waste anyone's time, or bring the right person in who can't ask the right questions. So I'm waiting to get all those questions so we know who to get, and we'll bring them in. But as I said, hopefully on Thursday morning, we'll be chatting to the chief economist at HSBC, and we'll get a bit of an understanding on what's going on there, and have a discussion there. But nevertheless, I'm going to send you over to Rich and David, but I don't know if Rich is there. So it might just be David to begin the show. And I'm going to lead them with a conversation, right? Because I think this is a good one, and I know they like conversations to talk about. So David, this one goes out to you if you're listening. At some point throughout the stream today, what do you do when someone asks you, what do you do? That's the question, right? When someone asks, what's your job? What do you do? What do you do? How do you answer it? What do you say? I'll leave you with a funny one. I tell people that I put stickers on apples, and I'm not joking. I generally tell people I put stickers on apples. I've told you guys that before, but it's a good one. It's a good one, guys. Thank you for joining us here at Morning Briefing again. We'll see you again tomorrow, 8:30 a.m. British Standard Time. And fun fact, this Friday, John and I are going to take over the London trading floor. So if you guys want to watch us live trade, this Friday, we're going to be taking over the London live trading floor. We're going to make some money, John. We're going to have some fun with it. So join us then. Without further ado, I'm going to send you over to Rich and David, and I've already given them a fun topic to talk about. During the break, let us know in the chat what your answer to the question is, guys. Have a fantastic day. John, we'll see you tomorrow.
See you tomorrow. Cheers.
I want that money. I want the Lambo money.
You know what I'm doing? I'm buying.
140 for sure. The more you zoom in, the more aggressive.
Tim Cook hedging against that already. This is the New Zealand dollar US dollar daily chart. Technicals, right? Price action is a result of fundamentals.
Really good earnings today.
We're looking at Brent's spot Brent.
The money will, like, between super reach.
Oh my God, it's Monday. I think you still might be muted, Rich.
No, I'm good now. We had belts and braces on a Monday morning. Check that out. So what a way to lead an opening question on a Monday morning. What do you tell people that you do for a living? I'm going to dive right into this. I tell people I'm a librarian. I said I'm 6'4". I was employed to put the books on the top shelves. Those that can't reach the top shelves, that's my job. So yeah, I've tried many different ways to broach the topic. In fact, only yesterday, I was speaking to a gentleman, and he said, "What do you do for a living?" And I kind of thought, should I go with the library one? I was like, no, I'll go real. I said, I'm just in the financial industry, and then I joked it off by going, most people, when you tell them, they go, "Oh, sorry, I didn't mean to do that there." But David, what do you do when people say, "What do you do for a living?"
It's pretty simple. I tell them I'm a trader. That's it.
You do. You're still at that.
It.
You still do that.
Yeah. Don't care what they think. And here's the thing, like, this is hard, right? What we do is hard in terms of trying to trade and all that stuff, and trying to read price action and do things that you do. And people are going to have thoughts about it, and that's okay. It's not like you're telling them you're a stripper, right? It's not like you're telling them that, like, what you do is what you do. That's it. You know what? I got the freedom to do what I do. Like this weekend, I was sitting there really appreciative of the fact that I had the time to day trade. Right? I talk about going to 9 to 5s all the time. And if you have a 9 to 5 that you love, more power to you. I'm happy for you. I want you to enjoy that 9 to 5. You know what? At some point, I might get tired of working for myself and go back and do the 9 to 5 thing. And that's okay. But I tell them that's what I do, right? Because at the end of the day, they're going to ask, well, what and why? And then I'll tell them my why. And that reinforces the idea to me as to why I day trade. And that's what I always go back to. So I just tell them I trade, and then I also, and in more modern times, I'll tell them, hey, check out TradeDelicious. I talk all about it there. But at the end of the day, I don't really feel like I have to disguise what I do. I'm okay telling people at this point.
Sometimes I would rather tell people that I work in a strip club than actually trade.
Well, some days it feels like you got stripped, right? You didn't do the stripping, the market did the stripping, and you get humbled, right? Like at the end of the day, like what we do again,
Yeah.
it's these are very challenging things that we do, and then we pontificate about those things online, and people don't listen to you when So we did a not buying it segment last week, and I talked about a firm, and I said if a firm closes the week above $34, I would look to be a buyer, right? Because it's breaking it. And I don't know how many times I got told it didn't break above 34. Why'd you buy it? I'm like, no, you didn't listen to what I said. Like it failed that level. It didn't close the week at that level. The trade didn't trigger. It didn't break the trend on a daily chart. Like all these things that I talk about, right? And I'm like, so even though I had all these conditions on the trade, right? To say, okay, I'm going to look to swing trade a firm, for a few days, a couple weeks, whatever it might be, above this level. It has to show a close above that level on a weekly basis, i.e., the close of Friday. Then I would look to go ahead and engage in the trade. And instead, they're like, hey, but you said this at this time. I'm like, I did. But did you hear what I said? No, you took half the cent. Again, you take the challenges, you have the conversations about it. And then on some takes, I said, I'm not buying NVIDIA. Why? Because I couldn't manage the risk. It just keeps going up, right? Why? Because we can't predict the future. And that's the beauty of this, right? Is that we look to try and figure out what price action is telling us, what has it told us historically, where could it go, where is it most likely to go, and then trade it based off of our edge. We're just all trying to figure out what the heck is going on here.
Right. Look, David, I was caught a little off guard with Dez's comment in the chat. I'm not gonna read it out. It's too early for them kind of shenanigans on a Monday morning. Why don't we pull up why don't we pull up the charts and we can have a look at some analysis on a Monday morning? It's a good opportunity to see where the market is after last week's movements. If you don't know what we're talking about, look at this 4-hour chart. So we can see that the market has just sold lower and broken under all these lows. Very, very clearly, sellers are driving price lower. Now, I kept asking myself why. And I was trying to work out, I was going through all the news calendars, I was looking at the fundamental reports, and I'm like, I just can't really, in my mind, this move didn't make sense. For the market to
it makes sense to me.
Ran. Does it? Please explain it. Please, I'd love to.
We had FOMC news last week, and what did the FOMC say? The FOMC said, no cuts for now, maybe one this year. Okay. They just spent the whole flipping year telling you that they were going to have 5 and then 3. And now the FOMC comes in here and says, maybe just 1. And what did the euro just do? They just cut, right?
Drop rates. Yeah, they drop rates.
So we're just trying to price this action. We're just trying to price this in now. Okay. Which is what markets like to do. They like to front run. Remember that term that you're like, hey, what's front run, right? Yeah. They like to front run. So in my opinion, this has more to do with the fact that they're going through and trying to get ahead of this price change, right? And trying to drive the euro lower against the dollar. And that's the comparison. You had a move in the euro that you didn't get in the dollar. And therefore you get this, and obviously we get this oscillation in price. But this is what the FOMC did last week. Middle of last week, they said, this is what's happening. And they confirmed it based off of, the Q&A, and their statement. And that's kind of what we're seeing here. So that's okay. To me, that's what's driving this. That's my 2 cents on this. To me, this looks a little bit more obvious.
So is this priced in yet?
Oh, who knows? That's the question, right? If I knew it was priced in,
you're going to give me an answer.
I would be going. So here's what we're looking at, though. I see a level on the 1 hour that we're getting ready to hit right now. Okay. So this is the newest level that I drew in, is the one that we're getting ready to tag right now. Let's see how this resolves, right? Because we do have a series on the 15-minute. We got a series of higher lows. We're retesting a high right now. We'll see what we do here. I like the idea of a short in and around this price just based off of the way the basketball's been bouncing, right? It's not bouncing higher, it's bouncing lower, right? So we had big move down, right? As you discussed, big move down, bounce, kind of liquidity grab down here, bounce again. We're butting our heads against this high here, but now we've got on increased volume, right? on increased volume, we're breaching these highs here. So we get a candle close above here. Maybe we go a little bit higher. If not, maybe a bit of retracement down. I like the idea. I am biased short based off of what I just said, but I have to keep things in mind in perspective with the fact that the volume's picking up and we are gaining some steam through this level. And if we get a close above this level, we could retrace a little bit higher, which is a better place to sell from.
Mm-hmm. Mm-hmm. Okay. So I see Des has pulled the trigger on a GU long at the moment. This it's an interesting morning for price action. We've got all these wicks on the 15-minute to the left, and price wasn't able to push lower. I mean, we have this really interesting price pattern. I don't know if anyone in chat was watching this late on the Friday. I was watching the market drop down, and we just got this indecision, all these wicks to the low side, and it was a really interesting period because the market finally decided that it was going to pull back and breathe from this level. If we look at this morning, we've dropped down into the same kind of area where the market decided to push up from, and it's done it again. And I'm already sort of asking myself, maybe I do have a bit of a bias. I'm already asking myself, could this be the low of the week? And I think it's because we saw this huge drop into last week. And I'm thinking, if this is priced in, this is why I was leading with that question. This would be the area that people would say, hey, well, this is as low as you go. This is as much as we're going to price this in. And there could either be some profit taking or some buyers coming in. But ideally, I'd want to see a break of the more recent price action and maybe a retest to go higher. So a break and retest would make sense in my mind. If I could see something like this, I think I could formulate a trade idea off it. Trying to get long, I don't know how to read this price action to the left to see whether or not that's something that I should be involved with. David, I'm going to challenge you to expand your trading pairs on stream and go braver than just Euro USD. What about GBP USD? Can you make a trade idea from it?
All right, let's take a look. Let's pull it up. I don't typically, look at how much I look at EU. Let's just GBP USD. Okay. Boy, I'm sad that I missed that long actually. So I love the idea of look at this consolidation here, right? And this is on the 15-minute, right? So if you were going to look at this and say, even on an hour, you got like a really like a doji candle that formed here, and we pushed up from there. We kind of chopped around here, but this is over the Asian session. Like this is kind of what we've done here, and then we're bouncing around again. The dip being bought this morning. So this is again being bought this morning. So I'm sad that I missed along here. If we get back up to this consolidation again, you got to look at whatever time frame you're trading in, and if you get a candle close below, then you basically say, okay, we're going to retest this low here. If you get a candle close above, look for the break and retest. I love the idea. Again, this feels more like a short than a long just based off of the recent price action. But at the same time, I could see a scenario right between now and the US Open that we close above this area of consolidation, break, retest, and then retest these highs here before the US Open, and then get the move down after the US Open.
Okay. I'm still not sure on the long-term directional bias on this. I was calling 130 on GU not so long ago, and we almost clipped it. I thought we're going for it, and then we dropped straight back to 126. Just makes no just like
almost
things are
made
changing.
It.
Yeah, things are changing.
I don't understand this move as much on. Did the pound cut as well?
I should know this. I think we've got an interest rate decision coming shortly. Isn't it this week? They didn't cut. Sorry, no, they haven't cut.
But so then I really don't understand. I don't understand. And I can understand the oscillation back and forth, right? And that's what I'm saying. Like, I understand. I have a theory. I have an idea in terms of like why the euro did it. And obviously that's the pair that I look at. And when I'm on here on a weekly basis, hanging out with you guys, like I like to at least, you see the hieroglyphics I got drawn on that chart, right? I like to read the price action on it, and it's something that I understand very much. In terms of GU price action, I don't know why necessarily fundamentally it's doing this, but you look at this and it's like they didn't like this move. This move here on looks like a 830 number. Yeah, we got like some sort of 830 print. This is an 830 candle. Like pound got bought up, and then it sold that move off completely. And I don't think this was dollar news. I just think I think it was just price reaction from a US number, and then we just sold that off. And that's Wednesday. So that could have been I'm guessing that's pre-FOMC as well. And we had a number that morning. So that could have been like a CPI print or something. Looking back, we'd have to see what the news calendar event, what the news event was. But either way, from that high Wednesday early, it sold off into FOMC and beyond. And we haven't liked it since. So I think you look at this and you say, okay, well, obviously the long-term direction is down. You've got a double bottom forming here. I think you try to break and that's why I say I like the idea of a break and retest, and then rejecting the 127 level and then moving down towards the 126 level. And I got some levels drawn down there from back when I drew levels on this. So they don't have the pretty colors like the other one. So I see no reason, if my EU levels are true, then why we don't retest some of these zones on GU. Because what's the narrative at this point, right? That we're not expecting a U.S. rate cut till at least September. They're not going to do anything before September. And I suspect that September is the time we get the rate cut. And we're going to be on reduced volume pretty much the rest of the summer, because realistically, what are the catalysts for the market this summer? And I'm talking U.S. markets. NVIDIA's already done their thing. They've split. Apple's already told you that they're going in AI really heavily, and you're looking for catalysts in this market. And we're gonna run a little drier. I think SMCI, they've got a split coming, but it doesn't feel like an NVIDIA split. So yeah, I mean, I think as we get into the summer, markets are gonna volume's gonna dry up, at least in U.S. markets, and we're gonna be faced with having to deal with that, and price is just gonna drift to where it's gonna go until we get a bit more volatility, barring the unexpected, of course, closer to August into September. That's just what I think.
Yeah, well, if we're looking for immediate price action moves, then we ain't going to get much sitting in the middle of this range. It's we're just not seeing the price action that we want to see this morning. If we can get a drive out of this range, completely out of this range, we can get directional move. If we can get directional move, we can formulate a trade idea from it. Unless your goal is to trade ranges. When I did the majority of my back testing, it was all based on directional moves and picking like areas in the market where, hey, we're now running. Where do I think we run to? Can I formulate a trade idea on the way to that level or from that level? But trading ranges, maybe that's like the secret gold mine. Maybe that's the most profitable thing.
Jordan likes him. He's told you his strategy, right?
Extensions. Like extensions.
He likes the ranges. He likes to just he likes to sell rips, buy dips, find something that's oscillating in a range, and just go through and just like trade the range. At least that's the last I heard when he that was my impression of what he'd like to trade, is find those ranges and then just kind of go backwards and forwards. Which, for a range trader, that's the thing I got to work on the most. Is being able to trade ranges, because on a stock, for example, you could get 80-90 cents easy on a stock that's moving $1.50 if you just wanted to play the ranges back and forth. And you could do that 2, 3, even 4 times on some stocks in a day and make pretty good money. So yeah, I'm looking. So we got the decision, I think. You know what, I'm doing this in the higher lows, but I think I like I'm still liking the idea of a short here. We kind of wicked through this zone, but we didn't close above this zone, and now we're kind of rejecting it. And we're 10 minutes, we're 5 minutes into this other candle. I like the idea of I do like the idea of a short here.
I'm curious. You've been trading for a long time now. Now you've got your trading edge dialed in. Now you've got your execution dialed in. You know your risk management. On a score of 1 to 10, 10 being the most difficult, how hard would you say trading is now? Now you've got all the bases covered.
It's still really hard. It's still really
hard.
You're
going to say 2.
No, it's difficult. Here's why. Because it's not something where you get to there, you get to a certain place in your trading, or you get to a certain place in whatever it is that you're doing, and it's like, oh yeah, it all of a sudden becomes easy. No, because now we start overthinking. There's always another goal, another milestone in mind. So you're always looking at and saying, okay, can I size up? Can I, how do I need to adjust my trading? Why is the U.S. market trading on highs? Jay and Jay were talking this morning, and I was like, man, you guys are singing to my soul. I've been asking the same doggone questions about the U.S. market for months. Well, how is the U.S. market trading on all-time highs? How does it continue to do it? And it took me a while to find the narrative as to why it's doing it. Because, and here's my thoughts on it. Number one, the indices are weighted, right? And they're weighted towards companies that perform really well. And while Apple's performance had been lackluster up until very recently, thus far this year, Nvidia's has not. Microsoft says not, the Googles of the world, all those, the Mag 7 became the Mag 4 and they continued to perform. And then Apple came around and said, hey, by the way, everybody's going to have to buy a new iPhone. And you know what we're all going to go do? We're going to have to buy a new iPhone because we want Apple intelligence on our phones. I'm telling you, that's this. And the U.S. consumer will rob Peter to pay Paul. We will find a way to finance this phone, whether it's through a firm or otherwise, and we will buy that doggone phone. That's just what's going to happen. And the Apple haters out there will say that's insanity. And I'm telling you that as somebody who has an Apple product, I'm telling you they're going to want to be able to do that. So if they don't have an iPhone 15 Pro, they're going to go buy an iPhone 16 or buy an iPhone 15 Pro at the appropriate time. And so what we're projecting, right, as a market is that Apple's getting ready to go into a super upcycle on their phones, which is kind of the catalyst that Apple needed. So you see a very few number of companies in the US performing really well. That has nothing to do with how the consumer and the health of the consumer here in the US. It just shows you that companies with pricing power and that are well capitalized are still doing well in this market, and everybody else isn't doing as much. If you look under the hood in the markets and you talk about your mid caps and small caps, they're not performing well. They can't sustain these higher interest rates. But at the end of the day, the big companies are just dragging the rest of the market along. And that's kind of why we're seeing this. And we don't really see this very often. So we have to take everything that we know or we think we know about markets, right, and say, okay, well, we have to kind of shelve that a little bit because that's not what we're doing right now. What we're doing right now is buying companies on strength and taking them higher. And if the companies are weak and they show weak earnings or they're not in the right space, then we're selling those things off. And I think we're really seeing that Restoration Hardware, which is probably going to be on Not Buying It Tomorrow, reported earnings. And Restoration Hardware, for those that don't know, is a high-end furniture retailer here in the States. They reported kind of bad numbers and they were punished, and they continue to be punished, i.e. people didn't come in and buy the dip because we're starting to see high-end consumers starting to trade down. So just because we're seeing great economic health here in the state doesn't mean that the consumer itself is healthy, just that companies are still able to, in the right space, make money. And we're weighted that way.
That's interesting. So what do they do with the companies that are underperforming? They just keep rotating them out?
Yeah, I mean, honestly, so you get these index rebalances, right? And they'll say, okay, this company's moving in, this company's moving out. And then which is great as a trader, you can find some price catalysts. So you get some pricing changes through there, some volatility through there, because you look to try and find a way to buy the one that's going into the index and sell the one out. And as it gets closer to time and you get to sell the news, you reverse that move. You sell the one that's going into the index, and you buy the one that is coming out. And so there's some trade in there. And because funds that track the indices have to buy those shares equivalent to, like, if they're tracking an S&P 500 or a NASDAQ 100, they have to buy the one and sell the one off. And so, yeah, the indices are designed to go up. That's just what they're designed to do. And the companies that are weighted most heavily, they're just performing really well. The companies that aren't weighted so well, like most of the market, if you look under the hood, you're sitting there probably underperforming, and you still have companies like a Tesla out there that really haven't reacted very well this year. Tesla's shares are down on the year. It just now held its first higher excuse me, its first higher low on a daily chart.
Do you think that's because of that the Cybertruck? Everyone, like every video I see online is just talking about like putting them through car washes or don't put them through car washes. Did they get a really bad rep?
I think at the end of the day, Tesla's very popular. It's a very popular topic of, number one, no, you could put a Tesla through a car wash. That's ridiculous. It's just, but what happens with these social media creators, as we're in this market ourselves, is we'll find a trend and then everybody makes the same doggone video, even though we don't know what we're talking about. And then all of a sudden you shouldn't put a Tesla Cybertruck through a car wash. It's a freaking car, man. Put it through the doggone car wash. Like, it's electric. I hear you and I understand that, but it also drives in the doggone rain. Like, why? And why would Tesla sell a vehicle you can't put through a freaking car wash? Like,
no, it's people like in the comment section. All I saw was just people saying like, you put them in a car wash, they just rust. Like that's what they were saying about these Cybertrucks and the carrot test as well. I don't know if you've seen that, where I'm scrolling through YouTube Shorts and I randomly come up with this guy holding a carrot and he's just got it on the rear quarter of the car and he's just pressed the button or closed the boot and the boot's coming down and it's meant to bounce on this carrot. And I never really saw what happened next, but apparently
it does chop the carrot in half.
I think on some, but then they had another car that done exactly the same, and I'm like, well, what's meant to happen here? So I don't know, carrots and car washes.
So unfortunately for Tesla, it gets wanted attention, it gets unwanted attention.
Right.
Earlier this week we talked about they had the vote on Elon Musk's pay package. And the shareholders voted for him to get it because they want him to have attention to Tesla. I heard J&J talking this morning, like, I don't tell people what to buy or not to buy because it always ends up being your fault, and you're correct, because people in this day and age, they don't like responsibility. They want to take that mantle of responsibility and put it on somebody else. And they don't think it's fair because even though they're the ones that hit buy or sell, they get mad at others because it's easier to be mad at others for their own mistakes. Number one, you don't have a trade thesis, don't buy a stock or don't invest. Like, have your thesis in mind. Have your time horizon in mind. Are you swing trading this? Are you investing in this? Like, what are you actually doing with the stock? And then formulate your own idea. I could like it as much as I want, but my book is different than your book. People have to realize that. So having that basis in mind, I don't like Tesla in terms of a stock. It's too, I like to trade it. I don't want to invest in the company right now. I just think that there's too much happening over there. Although I think it's a great company and they've got a lot of good stuff going for them, I would like things to settle down a little bit. And the stock's underperformed on the year. That's just basic. So technically and fundamentally, that's where I'm at on Tesla. But soon it could change. So they said, here's $56 billion or something like that. $56 billion to pay one human being to exist in your company. Like, that is insane. That's absolutely insane. Like, good for him, but that's his pay package. That's what shareholders awarded him. And the vote was like 76% of shareholders were for the idea that he should get this pay package because they just want him to pay attention to the company. But he's not. He's not. He's going to do that, and he's going to be on Twitter. He's going to manage Twitter. He's going to manage SpaceX. He's going to manage the Boring Company. He's still going to do all the things that he's been doing. So that's, to each their own. But yeah, somebody asked about as we're waiting for the euro to make a decision, right? We wicked below this price action. We wicked above this price action. Again, we're coming into the close of this candle here. We're seeing late pressure on there. I was interested in the short had we kind of closed, but we see this last 5 minutes on the euro, we've kind of seen it trying to break out of this price action.
Yeah, it's trying to push up to the high side. We're definitely seeing some interesting times at the moment. Even Misha in chat said, looks like a slow Monday. 2 weeks ago, I took 19 trades. Last week, I took 2 trades. Now, that's one thing that caught my eye because last week, I took 2 trades as well. I found it an incredibly slow week. Normally find a little bit more action in the market. Last week, I spent most of the week sitting on my hands. I mean, I wasn't sitting on my hands in terms of not doing anything, but I certainly wasn't clicking buy and sell. The market just didn't present many opportunities last week. So I mean, it's great that you made profit, but 2 trades a week. Misha, how many trades do you find on average per week? I'm curious about this because I used to get about 30 a month, around about 7 a week. And I'll be like, okay, I'm sort of, 1.5 trades a day. I can work with that. But if you're only finding 2 in a week, I mean, you nailed it when you said you'd much rather go for a walk and work out. Absolutely. There's no point sitting there watching markets that are moving sideways. I mean, someone's trading these. That's not where my edge is apparent. So I'm curious to see how many trades do you find a week, and yeah, 6 to 7 a week. And what's your dominant time frame that you're trading on? So for myself, I'm trading on the 15 minute. Like I wouldn't typically want to go much lower. We can drop lower than the 15 minute. We can look at all this noise down here on the 1 minute and say, hey, look, we've got this big sell off, we've got this bullish pressure, we've got this big liquidity sweep to the low side. Markets recovered this whole gap. Maybe we want to sort of be trading this inverse head and shoulders pattern, and we want a long and a pullback. We can formulate trade ideas wherever we want to formulate them. But the reality is the higher time frames will give you less trades, but they're typically more reliable, and that's over hundreds and hundreds of sample size, maybe even thousands. So this morning, even on the 15 minute, which is relatively a high time frame to me, I'm just not seeing a huge amount of movement. We can zoom out to the 4 hour on GBP USD. We've taken all these lows. What does this mean? Means nothing. Not until I get a nice kind of commitment from buyers to start pushing up. An indication that, hey, guess what? This was a run on liquidity. If you don't understand what a run on liquidity is, it's where the market deliberately drives down to price points and starts to fill orders at a better price, typically knocking retail traders in and out of trades, trying to bait retail traders. Yeah, hey, we've got under this low, we've pushed under, we've broke, we've closed maybe, let's get selling. Because traders aren't really going to trade until they get an entry signal. What better way to get an entry signal than move price? So if the market starts moving and getting under significant price points, traders can go, hey, I can make a trade idea from this. I can make a risk-adjusted idea. I can buy this. I can sell this. And I think that's where markets are. I think that's what markets are literally made for. It's just trying to get people to take action. Imagine this, right? Imagine an arcade machine. And you go to the arcades. What's the first thing you notice? David, you walk into the arcades. What is the first thing you notice? You're walking past and out the corner of your eye. What do you notice?
I typically notice the lights are the ones that have like the, jackpot ticket things. Those are typically the first things I kind of notice.
It is sensory overload. The noises, the lights, the flashing images. It's all about trying to grab your attention in a busy world and try and get you to divert in there and say, hey, this looks like fun. And why would it be any different with the markets? When the markets don't move, we all go, oh, this is boring. Let's go to the gym and let's do something else. When the markets start moving, we're all a little bit more likely to do something. We see those flashing lights. But there's a difference between the markets moving and finding a trade that you can action. And right now the markets are moving, but they're not really moving. Like they're moving on the higher time frame, but not really moving on the 15 minute. So for me, I really want to see a movement in price for me to get involved. Otherwise, I'm just stuck watching the markets go sideways for like 8 hours in a day. And that's not exciting. So probably the most interesting pair we've got at the moment is the euro against the dollar. It's actually pulled down into this kind of price point, started to push up. We got this beautiful, if I go to the 5 minute, you'll see it clearer. You have this sell lower, you get a push up, a pullback, another push up, gets above this high, market drops all the way down, gets under this low, and finds a nice amount of fuel to push the market higher. So it looks like the market's trying to move higher on this. This is probably a lot better than GU at the moment. So we could potentially look at this as the low, either the low of today or the low of the session. And we could say, okay, if we were to market enter this as a 21 pip stop loss, now we look at the hourly. As soon as we start running into this price point over here, I think this roundabout 0731. I think this is kind of where we saw a lot of selling pressure coming in. If I'm buying this, I'd want to be out before this price point. So even if I'm market entered now, 22 pips, we could just about get a 1-to-1 out of this. If I wanted that sort of easy profit in a straight line, saying, hey, I think we're now going to move up. But again, just not. I don't mean to steal the name of the show, but I'm not buying it. I'm not convinced that this is the move.
Rich, you can use that name as much as you want. I give you permission. But yeah, yeah, it's very indecisive for sure. But you know what? I said I like the idea of a short, so I went ahead and I'm testing along in and around these prices, and I'm holding it below the consolidation. But you're right, like in terms of like where the you saw a little bit of liquid. It's like less than a 1-to-1 trade, and I'm probably either going to lose very quickly, or I'm going to be out with less than 1-to-1. I think I like the idea of a short.
This is like going to be 100% win rate when you do this. You're like, hey, I like a short, so let me just long, because I'm probably just getting
because here's the timing, unfortunately, of all this, right? We finally got the close above the zone I was looking at, right? And that's exactly when I went in and bought, and we've seen this upward kind of like this upward pressure on the price of the of EU, right? We were seeing some upward pressure on it. So I was like, all right, here's the close. Here's the move up. And what did we do as soon as we bought? We sold off. Now it's only like I'm only risking like $40 on this trade. It's a very, very small trade. I'm not trading rich numbers on these things. I'm trading much smaller. But still I'm looking at this and I thought, okay, yeah, we're going to run up and retag some of these highs a little bit before the U.S. Open, the U.S. market open, not the U.S. Open golf tournament that happened last weekend. Congrats, Faction DeChambeau, for you golf fans out there. But no, I thought for sure we were going to start running up, and instead now we're looking to tag. We're looking to test a little bit lower, so we'll see. I won't get.
I've got a similar thesis to that on GU. I'm thinking this will pull back, and this, if it's going to go long, I think this is the price we'll do it. So I've gone in with a nice, cool, calm, collected 10 lot on this. I'm only looking for one entry. I got my stops on the local low, so trading around about 26.71. We're actually in with a market entry on this. We're only up. Not even a pip in profit. So around about break even, risking about $900 on this trade, around about 1% of the account. Still floating just a little bit in positive equity on this. So I'm going to be, I don't fancy doubling in on this. I think I'm going to keep it fairly stationary on this. And trade idea comes off the 1 minute. We've started to show this bullish interest all the way up. Market aggressively sells lower, breaks this low. We get above this high. And if I was to put a fib on this, from the low to the high, we can see that we are now touching the 50, and we're now looking potentially to go higher. So I'm looking at this price action holding. If I was to put a fib between the 50 and the 0, this is, or 50 and the 100, this is where I'll be looking to trade from. So that's the trade idea at the moment. Let's just zoom in. Looking for the market to come back, find some buying interest around about this price point, because it's showing a sign of trying to go higher. Now, we're gonna pick a direction on this. The market has taken liquidity from this low and broke this high, and has now taken liquidity from this high. And if it goes ahead and breaks this low, then I just got caught up in the chop. Market's got to go one way or another. And right now, what it's doing is telling me it can't make its mind up. But I'm going to go with the most recent price action. Market came and broke this high. As soon as it broke this high, I thought, this is the opportunity. If it's going to go long, this will be the low that it does it from. So just one trade. If the market continues lower, I'll be looking for a pullback and a continuation to the downside. But we are supporting a higher time frame bias, because we've gotten under all of these lows, and we are running into where we get these nice two bullish candles from the past on the 4 hour. So I'm looking at this specifically, this big bullish candle here, and thinking this if it's going to go, this would make sense in my mind as to where it's going to go from. Probably not looking, if we run up from here, to hold this into significant profit. I'm just trying to eye this up now. This would be good. That's $2,000 profit. This would be a good TP area. Maybe target the high of the day, just above the high of the day. If this is going to be the move, doesn't mean to say it is. So remember, everything we do is for entertainment purposes. Do not copy these trades. If you did, you will have a losing week last week. But manage risk well. Sized up, just got the wrong week to size up on, but traded well, and I'm quite happy with that.
Yeah, that's always something, right? Like knowing when to size up, how to size up, and then when you size up, if it works, right? And then you're always quick to congratulate themselves. And I caught myself almost pulling a rookie move last week, right? I was like, I was doing my trade journaling, and I had a trade that I won on, and I almost like, oh, I won, and so because I profited, it was a good trade. And actually, in all actuality, it was a bad trade because I didn't necessarily follow I didn't follow my trading rules. I jumped in on purely discretionary, which I'm a little bit more discretionary now than I have been in the past. But that's really from number one, it's risk acceptance, right? So on things that I'm a bit more discretionary on, I risk a smaller percentage of my total portfolio, and I just kind of allow my brain to kind of breathe a little bit. And then number two, it just comes from, again, years of day trading, right? It just comes from years of reading price action and looking at it and having a hunch on something. But it wasn't necessarily the greatest of trades. And I had some GME trades that weren't necessarily, I halt traded something. And so basically I was able to calculate the halt bands really quick and hold through a couple of up halts. And that is, if you don't have quick execution and you don't have a platform that allows you to kind of do that, I think that's not necessarily the trading for you. It's more, you got to look at making trading boring first. Get bored with trading. It's okay that it's boring, and then work your way into stuff that's just a little bit more spicy. But somebody asked, about GME stock, right? And I'm like, it's not something I'm buying, but I certainly love trading it. And it was definitely in the news the past couple of weeks because Roaring Kitty's back online and doing, he's talking about his positions, but what he's not telling people is how to execute on their own positions or what they need to be doing. He's really just sharing where he's at and why he believes what he believes. And he's not necessarily trade signaling anybody because, there were all the big boys were again complaining that he was, trade signaling, but he really wasn't. It's just that people have this assumption that if he shows his position, that the retail trader is going to come in there and look to buy the thing up. And we saw prices upwards of $50 this last push up on GME. But it's not something for a day trade. Could be exciting, but definitely not going in a swing trade portfolio. It's too risky to hold overnight, and it's most definitely not going into something where I'm trying to fund the kids' retirement in. But GME, a fun trade nonetheless.
Yeah, it's nice. It's nice that you're managing risk around that, and it actually drew my attention. Sorry, I'm a little distracted with this trade. We're up about $500 on this trade. Des, I've got a stop loss a little bit wider than yours. Sorry, a little bit tighter, around about 5 pips tighter. Was targeting the same take profit. Now, I've looked at this and I've extended it for about 2.5R. I think we've already come up and where I was looking to take profit. I think if we break that, we're good to go. So why would I want to take profit at the price point that I think we've already had an opportunity to push down and sell from? So I'm going to be targeting a little bit higher than that. This will be around about 2.5R trade if it can do it. Risking on this trade currently $1,010. We're up nearly 600. So we're up about 0.6 of an R. Not going to stress, not going to over manage this and pull the stop in. I'm just going to keep it nice and wide on this. Right now we're in between sort of take profit and stop loss. So I'm going to just set and forget because I really like what Misha said this morning. Realize the more time I spend on the charts doesn't equal more profits. Surprise, surprise. The longer I stare at the screen, the more nervous I get, the more mistakes I make. So if I don't see the setup right away, I pack it in and try again next day. With 19 trades, Misha said they spent 50 hours staring at the charts. That sounds awfully familiar, and ended up with a loss. Versus 2 trades of spending 8 hours per week and actually making profit. Now imagine there's actually something to that. Imagine that's where your edge comes from. Just have a look at the charts, chuck a quick analysis on there, make sure it meets your plan, manage risk, then go and do life. That sounds like like we all got into trading to not sit there and stare at these candles like 8 hours a day, right?
Time that we got it. You know, for me, it's time. Time is we always like, there's a phrase, time is money, but it really, it's not, hey, the more time I spend on something, the more money I make. It's the more time I have to go out and kind of live my life. I know that I make my money trading US markets the first 45 minutes to an hour and a half. If there's a special event later in the day, I might come in and trade it. But pretty much that's all I'm going to do is I'm going to trade that market open into that 1030 number or 1030 into 11, and then after that I'm done. Like whatever I did on that day, I did. You know, if I made $100, if I made $1,000, whatever I made, and I move on. I don't sit there and overstay my welcome. If I got a good read on the markets, if I managed to get a great read on the markets, I'll do that. If not, then I didn't, and then I just move on with the rest of my day. And you know, especially over the summer, like I don't want to, you know, anytime I've traded for longer, when I've had a bad day, I've made it worse. When I had a good day, I gave it all back. And so those are things for me, you know, based off of the way I trade US markets and trade stocks. That's what all of the back testing and all of the journaling, everything that it's taught me says I'm a really good trader at the open, you know, and then beyond that, don't participate for too long unless there's a key event. And then usually if I'm participating around key events, I'm using the next day's risk. And if for some reason, and then that keeps me from risking twice of what I would have in one day. It's like, okay, I'm going to use tomorrow's risk. And if I make money, then I get to trade tomorrow morning on the open. And if I don't and I lose, then I'm out of the market tomorrow as well. And that's okay. And I've been,
that's brutal.
And at the end of the, because that lets me make the decision knowing full well that I'm kind of giving that up. We have to be the ones that hold ourselves accountable in these markets. And we have to have rules that keep us safe emotionally and keep our accounts safe. And if we have those things and we hold ourselves accountable to that, and then, you know, if you got them in your life, find somebody that will help hold you accountable, right? And say, hey, here's my set of rules that I wrote for myself. If I'm not doing these things, ask me if I'm doing them. And if I'm not doing them, tell me I'm not doing them. And really hold yourself accountable. Really do that. Anybody that's done anything amazing in life, you know why they do it? Because they're obnoxious about what they do and they hold themselves accountable, and they are harder on themselves than anybody's going to be on them. Also, they're probably not really normal, right? They probably can't tie their shoes. They're probably really gifted at something. But what I am saying is that you have to take a little bit of that and really, really utilize that to make sure that you keep yourself. We're all going to slip up. We're all going to make bad trades. We're all going to, you know, so on that off chance that happens to you, you have more of a buffer and you could stay in this game. Because I think trading's gotten harder now than it has been before, because I think market makers know that retail participation's up and they're looking to shake us out of trades. And the most obvious trade is not the trade that happens. And so you really have to, find ways to get in these markets that you used to not be able to, that didn't have the same read before. We're all sitting here talking about, well, why is the market doing what it's doing? Because it doesn't make any sense. And market makers know that, and they have to make money one way or the other, and they're going to do that.
All right, let's put the cat amongst the pigeons here then. So you turn around and you said that the markets are just moving different. Now, we've all heard this phrase, we've all heard this trading strategy, we've all heard these concepts called smart money concept. Now, I had the privilege to see a trader talk about a smart money concept trap, talking about how so many traders have been taught smart money concepts that now the markets are out to get the smart money traders. So you wait for the smart money trader concept to set up. Nice and easy, super clean mechanical rules based system, from what I understand of it. I'm not specifically a smart money trader, but I do understand some of the concepts. And he was saying smart money trader trap. That's his signal. So he would wait, and he would wait for the smart money to go, guys, I found it. I found the entry. I found where the liquidity's been taken. We got the sweep. We got the break. We got everything we need. We got the fib retracement. We got the fair value gap. We got the 2 pip stop losses and the 97R take profit targets. Now all I'm waiting for is that trade to fail. And I don't know how reliable it is, but everything was traded live and documented. And the trader went on to make, I want to say around about 40% return a month. No, 40% return over 6 months. Okay. And I looked at this, I was like, okay. But I think they were risking 1% a trade. And they were going like 1 to 10 risk reward. And it didn't take 2 seconds to say, okay, well, what's the win rate on this? And I looked at the win rate and I was like, okay, this sounds like a pretty hard gig, because the win rate was super, super low. Now, it got me thinking, and I sat there and I sort of meditated on this for a minute. I was like, okay. My immediate bias was smart money trader trap. You're trying to sell me the idea of something, a course, a signal, or whatever the case might be, right? Because you've got a perspective that's different from most. The hot topic right now is smart money trading. Everyone trades smart money concepts. Everyone knows smart money concepts. And it's like, just learn that, you'll be profitable. So how do you get ahead of that? Well, you start teaching about how that's now failing and all that stuff. And I was like, but would it make sense? Would it make sense that if so many traders started piling into this smart money trading concept or any particular trading style, would it make sense that the market would just slightly adjust? And I was like, that'd make a lot of sense in my mind.
It does. Well, buyers and sellers, right? If you're selling it, I'm buying it, right? But if everybody's looking to sell at the same price because they're using the same concept, then the market isn't necessarily going to react in the same way, because we're all waiting for the same thing. Right. So if the bulk of us are waiting for the kind of like the same thing, then it's just going to be harder for it to get there, because, the market maker has to get it there somehow. Somebody has to be doing it. Right. So if 95% of us are trading smart money concepts, right, that means the other 5%, you know what I mean? Like, there's no equilibrium, right, in that sense. So then it just naturally is going to adjust. It's not like I, as a market maker, I'm going to be like, I'm out to get this specific group of traders. Number one, I wish I had the notoriety as a human being that the market was out to get me in particular, that they wanted to come after David. Like, I'd be able to write a book. It would be a bestseller. You know why? Because the market tried to get me. I wish, right? That's not necessarily the case. At the end of the day, if you're going to, I'll use a UK, was it Tesco? Is that your supermarket over there? Is that okay. All right. So say you're going to Tesco, right? And you're looking to buy a package of bacon, right? And everybody's waiting on the bacon to fall to a certain price. Well, at some point, it's just going to take, like, if everybody quits buying bacon because it's too expensive, it's just the price of it's going to fall. We're all just going to wait to buy it, right? And if bacon is cheap enough, guess what we're all going to do? We're all going to go to Tesco and we're going to buy up as much bacon as we can at the price that we like it. And markets are going to be like, guess what? Everybody likes bacon now. We can raise the price on bacon. It's safe to, right? And so it's just the market. It's not like, now, does it feel that way? Absolutely. Why? Because the one time I trade an SMC concept and or an smart money concept, and I make that freaking trade and I get grabbed on the lit grab, and now this thing has failed. It's a terrible program. I can't believe I did it. Why did I do this? Yada, yada. And then we second guess ourselves, and then we journal through this, I'm looking at my trade right now. I don't have a lot of risk on. Again, probably about $60 worth of risk. And I'm looking at this thing, right? And what are we doing? I thought we were going to push higher. And so I broke, it was a breakout trade on a 15-minute chart. I've been in drawdown most of the doggone time on this trade, and then the last portion of this the previous 15-minute candle, we pushed up in the last minute. We went back above the zone where I bought, and I'm like, okay, we're into the, and I'm sitting here. I bought the top wick of this thing, and I've been in drawdown for 45 freaking minutes. Well, the market's out to get me. No, it's not, because had you slept in this morning, the market wouldn't have got you. See what I mean? Like, we definitely have to be wary about like the gotcha games and thinking that the market's out to gotcha or not gotcha. Mm-hmm. But at the end of the day, like, I decided to buy at this price point. It just happened to be that I bought, you can see where I bought it there at 107, 102, and it's doggone near the top wick, thinking that we were going to break higher. And then I had faith, and then we've been, we're still in trend. We're still well within the trend. But now I'm looking at this and saying, well, I'm going to have to wait a little bit longer. And hopefully after the stream, this price pushes up and it gets to my take profit, and it actually rewards me. But if it doesn't, then it's because it just didn't, right? Buyers weren't there. Had nothing to do with S&C or anything else.
Isn't it? Like Aresh says, when smart money becomes dumb money. It's just a probabilities game. So check this out. So if you look at this chart and you look at where I bought, around about 26.70, and I went in with 10 lots. It's just 10 lots. Now, the entry, in my opinion, the entry means nothing. What matters is where my stop loss is. And the reason why it matters where my stop loss is because that's where, if the market can get lower, it can physically close 10 lots in the market. Now, 10 lots in the market shouldn't mean a lot, not when you're trading GBP USD. But if we had 100,000 traders look at the same thing, and all of a sudden under here we got 2 million lots, you think if price could just push just a little lower, 10 pips, and it could fill 100 million lots or whatever was down here, right? What would that do? You're going to think about it. It's going to close loads of buying pressure in the market. Imagine this wasn't CFDs. Imagine this was executed in actual real markets. Market would move from here to here. Now, you think if you could sell this with 50,000 lots and it was enough to push the market down to here and fill 100,000 lots, that's great business. Because you're basically buying a car at $100, and the market then moved down to this price point. Now it's worth $200. Now you can't close those 50,000 lots. Why? Because the second you do, what's going to happen? You're going to close a whole bunch of selling pressure, adding buying pressure, and the market's going to pull back. So the price would have to go to a point where it meets a buyer. Where would the buyer be? Where people are waiting to execute the opposite orders. So this is great business. If the market can sell from here and put enough size on to get down to here, when all these orders are executed, the market could, there's a key word, could push lower. When it pushes lower, you then have the ability to basically match a buyer with yourselves, and you get out of the market and you do it for cheap. So it's fantastic business. So I'm anticipating that the market has already done this to here, from here. I'm anticipating the market has already pushed lower, taken out all the buyers that had their stops under here, shown that there was possibly institutional interest at this level. And when you grasp this in your mind, your whole view of the markets will change. Everything you look at within price action, it will be like someone's turned the light switch on. You will just see it everywhere. And you can just formulate these trade ideas from it and say, do you know what? I think this is a real thing. And then you can go back and you can go look at the charts and you can say, imagine where the retail traders, or imagine where the market gets an idea about where it wants to go. And then just look to see if you can formulate a trade idea from it. Johnson, have you ever heard of the concept painting the tape? No. David, have you heard of painting the tape?
Painting the tape. That's interesting. I don't know specifically what that means. No, never heard of painting the tape. Yeah, that's
morning brief. So tomorrow morning, Jordan's going to go through it in detail. Painting the tape. I hope it has something similar to do with this concept, because this, if you can get this one thing down and you can go back and study price, you'll see that there's a probability in it. And I can say that confidently because I've spent many hours studying it and I know there's a probability in it. The logic stacks up and I'm like, okay, but then why does it fail? Because I don't have level 2 data. I don't have the Smarty Boy charts like David, and I'm not able to see where the orders are. And
I'm reading what
could
Jordan
possibly
said.
help.
I've heard of this. I just never heard it called painting the tape, but definitely spoofing orders is kind of like the idea where and you're not supposed to. So you post the orders out there to get people to run away from size and look. Yeah. So yeah, I've always heard it called like spoofing the tape. So you spoof the order onto the tape, right? And so you're looking at it either like if you've got like a super dom or depth of market, some other people call it, right? And so you're looking at the tape and you're looking to see orders on there, and you're like, okay, if say for example, I'll do this on a stock. Apple at $200, right, has, I don't know, something like 500 lots, right? So if you're looking at that at 500 lots, that's 50,000 shares, and you're looking to buy or sell at a certain price, well, then what happens is orders will kind of like stack up in front of it, looking to use that as a backstop, and it's not orders that are actually. So they'll sit there and spoof those orders out there to get it to run away from a certain price. Some people, what they'll do is they'll trade amongst themselves, so they'll just buy and then sell. You'll see in firms like, and then especially if they're getting like a rebate on it too. And yeah, there's lots of games that kind of happen on that. Oh, so he's saying painting the tape actually is orders that they're actually trading. Spoofing is a little bit different. Okay.
Okay.
They make the actual trades, lift the stock price, and then that's definitely illegal.
Well,
that's definitely one of those. That's, and it's, if the SEC catches them, it's no bueno, because they're not looking to actually make a transaction there. They're just looking to either get paid on the rebates. People used to rebate trade like that all the time. And so
Jordan's saying he's going to show us. I'm super interested to see
this is going to be very, very interesting to see how it shows on the how it shows up on the tape and forex. I'm guessing forex markets on currency pairs. That's going to be really exciting to see, because I've seen it before in terms of like spoofing orders, and then those orders don't actually get filled, because what happens when they do get filled, at least in stocks, is that price tends to break out, because that was the backstop, right? From, if people were selling and it had upward momentum, they were just kind of selling in the strength. You usually kind of see price kind of snap through that level and then kind of execute to a higher level. When it actually happens, the spoofing of the trades or the painting of the tape, that's gonna be really interesting to see. Tape reading's hard. Tape reading is really, really, really hard. It's a skill that for me, I don't use very much. I typically just try to focus on the price action. If I happen to see something really interesting happen, only certain stocks could I do it on.
What do you call tape reading? Like, give me an example of tape reading. I don't know the term.
So it's just taking the level 2 and the time and sales and just looking at the prices that are kind of scrolling through. It goes through so fast. If you don't have it filtered properly, then there's just a bunch of useless information, because if you don't have it filtered at all, then everything that goes through just kind of goes through. So you really have to filter it to where you can see larger orders kind of coming through, and you get a sense of what people are kind of doing. But it's just another way of looking at the chart. It's just a price action that's being drawn on there. But depending on your platform, you might see it in time and sells or the depth of market first before you see it on the chart, if your software just tends to be slower. But realistically, you're looking at that in smaller time frames. I'm talking like the 1 minute, maybe even the 5 minute. You're just kind of looking at that stuff. On the 15 minute, like, to me anyways, I think that's where I think, that's the smallest time frame I think people should start trading on. And then trade, really trading on the 30 minute or the hourly, and just being really, really patient. But I know it's not fun, and you're not YOLO YouTubing it if you're not trading on the 1 minute, and everybody wants to trade. And I got it. I understand. But that's where you start to you really want to kind of see that stuff. If you trade on a higher time frame, you could reduce your share size, reduce your lot size, and kind of do what you do. You got time to talk about how your trade has pretty much sat in drawdown for the entire hour, and we're now just about, for me, break even, and we haven't made a single decision. Also, I'm looking at this and saying there's really upward pressure on EU, but it doesn't want to do anything because I'm on the show right now, and it's just going to take till we get off stream for this to actually move into profit and prove me right at some point. But I'm still, I like the idea of a short. It's just too cheap to sell down here, and we have to just have a little bit more of a retracement on that as we get into U.S. markets. And I'm $2.50 in the money, Rich. I told you. I was going to be right.
Out. Check that out. $2.56. By the end of the stream, you'll be up like 30, 40, $50.
Maybe,
hope so.
Yeah. So at this point now, I got to hold this I have to hold this, right? If I held this all the way down here where I was like $30 in drawdown, $30, $40, basically what I did was this consolidation here, that's kind of, if we broke that consolidation, I didn't want to participate anymore. We do have this red level is off a daily level. So realistically, the better stop would have been down here, but I bought a half size position, but I bought it so high, right? Because this was going to be a breakout trade. This would have been a different trade. So at this point now, I have to hold this for longer. So I have to hold and pray through this.
If you went in with half size, you left yourself another bullet in the chamber. Why don't you double down?
I did. I did leave myself a bullet in the chamber, but I wasn't as confident on the trade because so here's what happened, right? I liked the idea of a short, but I saw price action telling me long. So what do? Well, either don't trade it, which fair enough. You could do that, or reduce the size on the position and trade something you're comfortable and then go off from there, right? Otherwise, I would have had a stop that was ultimately would have been too tight, and I would have been whipped out of the position a long time ago. So instead of that, go in with a half size position, let the market do what it's going to do, and then let it trade from there. At some point, this will, if it tags up close to like 0.5 to 1, then I'll probably move my stop to break even, and then it just costs me commissions to make the trade. And if it comes back down, I don't want to be involved in it anyways.
Yeah. And so another thing, you trade 1 minute charts, you got higher commissions because you're going to have tighter stop losses, and it's just going to cost you more money because you're trading with bigger loss. Trading with 10 pip stop loss this morning.
Problems.
More money, more problems. 10 pip stop loss on 10 lots this morning. That's going to cost me $40 just to place the trade. Now I could be wrong on top of that and lose $1,000 as well. That's $1,040. Mishra, I like your comment. You said that's what brokers and banks do. They host events, promote various trading patterns, courses, and software, aiming to attract new investors. So also they can use it against us. Now, I'm going to offer you a different idea. I don't think, no, I'm going to avoid saying that. I think you are partially correct, but I also think that the markets don't care so much about your orders. I think it cares about participation. If you're there, you're placing orders. If you're placing orders, the market's efficient, it's functioning. What's a better market? A market that places one order a day or 100 million a day? It would be the one that has a queue for the hot dog stand, right? It's the one that has a lot of liquidity. It's the one that has a lot of participators. So the more that, you get social media influencers pushing the narrative that, hey, trading's really hard, but if you practice some patience, you can do really well in it. And then you get the other side of the coin that's, yeah, trading's really easy. I've got a Lamborghini. I make a Lamborghini every week. The more people that create trading content, the more courses that are sold, the more softwares that are made, the more trading patterns that come out, the more names and narratives that come towards trading, the more awareness there is of trading. The more awareness, the more participants, the more market orders, entries, stop losses, limit orders, buy stops, all this good stuff. So I think if the educational world stopped promoting trading, then there would be less people coming in. If there's less people coming in, there's less money going into that business, that economy, if we call it that. And I think that it's just going to be less efficient as a whole. So I don't think the market specifically, I don't think they're teaching it so that the market can use it against us. I think it's more so people come in, they don't really know what they're doing. And so if you have a trade thesis and you can say, well, I think this is what the market's trying to achieve here. I think the market's just trying to achieve orders. That's the 6 years of full-time trading, thousands of hours, probably well over 18,000 hours. And it's like, I believe the market is just trying to move around randomly and just fill orders. I think that's all it's trying to do. And it can only fill orders if orders are there. And it's only going to get orders there if participants are in the market. Do I think the market deliberately creates patterns to get traders in the market? Now that would be an interesting question. I'm not going to answer
love
that.
the
because
I
wanna
love
hear David's answer.
the tinfoil hat take on does it create patterns to induce us into it? I think that we can easily create the narrative that says that it possibly does, because you get the how many content creators have you heard the bull fake out bear shake up flag pattern, and we're going to take advantage on the backside. And at the end of the day, all that happened was there was an argument between buyers and sellers, and at some point it resolves itself and we make money on the resolution of that. And we just hope to be on the right side of the mom and dad argument when it comes to it, and hopefully we're not taking sides, right? Don't take mom's side, don't take dad's side. The better we are at that, and the better we are at being at the right side of the argument, the better off we are. And as traders, we just have to be able to change our minds. This isn't something as a trader where you're convicted on a take and that's the only way. Like you make money changing your mind. You make money by changing your thesis on something as you see something develop. Like, it's not like, well, I have to be holding to my convictions and I have to trade this way until my account dies. And well, that just sucks. You're just not going to make money. So I think it's a little bit of that, but can it feel like the market's against you? Absolutely. And it could feel like, okay, the trade doesn't work because you designed for it to work 100%. Like, it always feels like you have a 100% loss rate when you take one loss. You have to look at the trade probability of the trade setup. Some of the best trading setups, like a 1 hour trade, right? Could be 60-70% hit rate. That means that 4 times out of 10 or 3 times out of 10, a 1-to-1 trade isn't going to work out, right? You lose on those, and you might take the first 3 losses in a series of trade over 10 trades. You might take them all up front. So it really feels like 100% loss rate, right? And so you have to look at those probabilities and make sure that you keep that in mind and kind of and pan out on it, versus really don't think about the bigger picture right in the moment that you're in the trade, and then you're like your immediate post-trade reaction, right? Back away, go back to your data and see, make sure it's aggregated over a series of trades and not just a couple of trades to say that this is a good strategy or a bad strategy. Again, it's always going to feel terrible to take a loss on a trade. But don't overstudy it, because sometimes it's just simple probability. It might have just been that the setup didn't work and it just didn't work that time. And it wasn't because the market really wanted to take Rich out. It's just that it just didn't work at that point, and the market was saying, hey,
David, we're finally getting the breakout. Finally getting the breakout from GU to the upside.
Yeah.
So now imagine
EU's doing the same thing.
What's everyone going to do now? You think, the market's going high, the market's going to break out this range.
Get out.
What's everyone going to do?
So long. Cut it short.
Yeah.
I'm just kidding. Honestly, so in terms of what I'm looking at on EU right now, I'm looking at a level that I drew off of, looks like a 30-minute chart. So I got a 30-minute level that we're kind of climbing up into. If we get to that level, I'm moving my stop to break even. Now I'm trading for free. That's just personally on my trade. Why? Because if we get up there, it's $20, and $20 is $20, but I don't care about it. That's just me. That I would rather make $85 on this trade as we approach another level on the hourly, a little bit higher, and hoping to get to the US Open. That's just the way I'm going to trade, based off my own position and the size and everything else. And the other thing I'm going to do now at this point is, since we're breaking out on this, if we close this 15-minute candle 27 seconds left to close. I'm actually going to tighten my stop because I'm not going to risk this $60 that I was risking down here below this consolidation. At this point, prove me right. I'm actually going to tighten it below this 15-minute candle here. 10 seconds left in this candle. So I'm just gonna basically take it below this wick low here. And I'm saying, okay, I'm going to reduce the risk a little bit. I'm not waiting anymore, because if it comes back down here, it's going to my experience, the way I look at charts, it's probably going to take my $60 and keep moving lower. So I'd rather let me just give it $34, and I'll continue to reduce risk from there. But yeah, really strong close on that last 15-minute candle. So I'll tighten up the risk a little bit. I'll look to get up here. If we get up here to this 107, 181, for me, I'll look to take this to closer to break even, and then try to ride this. Like, I'll do a trailing stop up until break even, and then let it tag this level here, which is ahead of the hourly. So that's what I'm hoping for. I could be wrong, and I could lose $34, but now I'm losing $34 instead of 60.
Mm-hmm. And if you can do this repeatedly, that could be $3,400. It could be $34,000. I mean, that's the beautiful thing about trading. And I wonder how many traders sit there and just use compound calculators, or just constantly work things out in their mind. I'm an absolute
I mean, that's what
sucker
trade
for
copiers are for, right? Like, you could use a trade copier if you can't handle the big numbers, and you put multiple accounts on that trade copier, and you just have those things
but
working
not
in
just
the background.
handling the big numbers. Just sitting there and going, you know what? I got a 20K live account. Let's say, for example, I could trade 0.5% risk. That's $100. Maybe I get a 7-hour month. Oh, that's $700. That'd be quite pleasant. Yeah, but imagine if I had a 100K account, and then you start doing the math again. You think, hang on, 0.5% risk on 100K. Wait, no, let's not stop at 0.5% risk on 100K. What if we were really spicy? What if we had one account that we were aggressive on, and we used 0.75%? That's now $750 trade, and before you know it, you're up there in the millions. Go, wait. So if I had $2 million of funding and I was risking 0.5%, I'd be risking $10,000 a trade. And if I had a 7-hour month, that's $70,000. So my payout would be about £48,000, give or take. You think, right, £48,000. Oh no, I'd never go up to 7-hour profit in a month. Imagine you had 2 million of funding and you were up 3R. You're up $30,000, give or take. Would you keep trading, or would you stop? And this is the things that I think about when I'm when I'm on my own, just watching the charts, and I'm like, would I stop? Would I lock in a payout? Would I secure a profit? Would I risk that profit to potentially make more within a trade? I can't be the only one. I cannot be the only one that sits there and just
no,
loves the
it's
math.
tough. It's so tough. And so I was looking at actually went through this exercise, this compounding exercise, and said, okay, if I took $100,000 account, and what's the base amount I could grow that into over a 12-month period, making 4% a month. If I made 4% a month, and so it's like, okay, well, it started off, it's 104,000, take the 104,000, add it to the 100,000, didn't take anything out, take that 4%, compound it, now it's 108 some odd change, and it kind of went through there. And the money that when I saw that exercise in action, like not taking any payouts or doing anything else, it was like 30 some odd $1,000 over a 12-month period, which was really almost, obviously, it's like 30% of the original amount, right? So you really made like 30% doing that over a monthly period, or taking the money and kind of compounding. And one of the things, and one of my personal goals that I'll share is I have always said I want to spend last year's money this year. And what do I mean by that is I want to spend the money I made last year after I paid taxes and did everything else on it to live on this year. And anything I make this year, I want to invest, put away, work on, like to do it next year. I want to, because again, I love the idea of my time, right? I go back to, it's not about being rich and buying all kinds of whatever it is, right? You could get that stuff and there's no problem with it. And I buy myself dumb stuff all the time. I try to keep it to a minimum. But I do get caught buying goofy stuff, for sure. But the idea of having your time and building and having more of your money doing like other things and working for you. And then kind of like, the more mailbox money you have, the less you got to go out and fetch for yourself, and just kind of like automating that process a little bit, so that you can actually live your life. I think that's very, 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 very important. As somebody mentions the Tom Hugard, his videos, that dude is something else. Like, I can't do what he does. That dude's a baller. Like, that guy is crazy. It's not a method I would use, for sure. But he knows what he's getting into when he goes into it too.
What would you? I'm just trying to think. If you started with 25,000 and you turn it into $1 million, how many doubles is that? So what do we got? We got 25 into 50. That's 1. 50 into 100. That's 2. 100 into 200 is 3.
3.
2 into
4.
4 into 8. So we're talking a little over 5 doubles. That's some serious gains. Yeah, I hadn't heard of that before. But again, I mean, that's what trading can do if you have an edge, if you can aggressively manage risk around that edge. I mean, yeah, I'm not a good enough trader to want to double up every time I double an account. I wouldn't want to do it because I know that my drawdown, the way I trade, I would only be X amount of trades away from potentially hitting like a major losing streak. What would that look like? So if I could do 7 hour a month, that means every 6 weeks I could potentially double an account. So every 6 weeks I would double up, but I would have to double my risk. Well, one, in a UK regulated broker, I wouldn't have enough leverage to do it. 2, I would only have 10 trades until I blow the entire account. Yeah, that's statistically normal for me to go for a 10 trade losing streak. Nah, I couldn't do it. The numbers don't make sense in my mind. So props to him if he can do it. He's trading edge.
But again, the other thing is that that's not all his money. That's and like where people lose sight of this stuff on like, it's not like all I had was $25,000 and I did XYZ with it. No, like he's living off of different money. He's got other money here. It's like, it's not like the electric bill or this trade. Like, that's insanity. Make sure, like, if you're not making money trading, that's fine. It's okay. Nobody's here to judge you off of that. Like, that's why you're here in the first place. We're all here trying to learn, figure out these markets, and trying to be better retail traders, be a little bit more institutional in how we approach these markets, so that we can make money trading. So if you got your 9 to 5, no harm, no foul. Go to your 9 to 5. Make sure your bills are paid. Make sure you can put food on the table. That's first and foremost. Once you could do that and your trading kind of catches up and allows you some buffer time, right? And you could trade through a drawdown and still feed your family and keep your lights on. Now you start getting into that realm. This idea where you're going to compound an account in 3 weeks or less and do all these things at like, that is a lottery ticket. And last I checked, we're not out there trying to buy lottery tickets. We want to trade high probability setups that allow us to trade these markets, make a little bit of money so that we can have our time, right? So if you want to I love a midday siesta. That's like one of my favorite things. Like, you know what I mean? Like
you're showing your age now, mate.
You like that? Like, about 12:30, let me just, have a nice lunch and let me just go back and rest up for the rest of the day. You know why? Because I want to go to the park and go on a walk or do whatever. Like, who doesn't love a little cat nap in the middle of the day to recharge the batteries? Why not? Right? You want the ability to do that, right? You can't, if you keep gambling, right? And gambling in a way, right, where you're over leveraging, over risking. That's why I'm talking about the gambling. That's why people get all up in arms and they say trading is gambling. Inherently, it's sure, right? But being more of the gambler and less methodical in what you're doing, then you end up in situations where, you get stuck not being able to take a midday nap because you work a 9 to 5 somewhere. Where, you know what, if naps are what you value, then take care of your account and your account will take care of you.
So what have we learned today? We've learned that it is possible to 5x your account or 5 double ups within a year. It's been done. I guess it's been publicly done. We've learned that David likes midday naps, and that's why he doesn't want to overtrade and stare at the charts for too long. We've learned that it's actually okay to have a full-time job or a part-time job and de-weight the significance of immediately trading for an income. I would always prefer to be in that position where you go, hey, outside of trading, I'm good. Inside of trading, that's my bonus. Can trading 10x my income? Absolutely. But the fact it doesn't need to, that's brilliant. It's going to literally put it into a position where I'm like, I don't really care. Like this trade on the screen, I really don't care what happens with this. If it wants to go down and lose 1R, it is what it is. If it wants to go up and make 1R, it is what it is. When you're in a position you don't need that money immediately, you can just trade your edge. And that's the only way that I will be able to consistently return based on my past data, is if I can just turn up and trade that edge. Every time this trade goes up $300 in profit, if I'm in the poorhouse and I'm like, I need that $300 right now, I'm going to close that trade. Next thing you know, that's the one that runs $2,500 in profit. What happens? I was stealing off the table before the 3-course meal got brought out. And you're never going to realize it. So when you can bring your awareness to your full gap between the results that you should have got and the results you did get, that's when you have accelerated as a trader. Last week, I lost money. Took 2 trades, lost money, lost 0.3R. Oh, well, guess what? I traded 100% objectivity. So that means when the 6R weeks come along, guess what I'm going to get? I'm going to get 6R. I'm sick of being in the markets and the market runs up 5R. I get to the end of the week and go, I've done 1.2. Why? Terrible psychology, terrible risk management, terrible execution, terrible life balance. I didn't have my midday siesta, as David's talking about. So if trading is 90% management and psychology, why are we sitting there trying to study strategies for 90% of our time? We should be able to sit there and say, right, 33% of my trading time, if I spend 3 hours a day learning to trade, I'm going to spend an hour a day learning about risk management. I'm going to look at different risk management models, look at my win rate. I'm going to spend 30 minutes or an hour a day studying a strategy. I'm going to learn a little bit more about price action. I'm going to go up and look at these crazy breaker block candles and liquidity candles and fibs and all these wonderful things that we put on the charts. And then the third part, I'm actually going to spend an hour a day trying to learn more about myself through psychology. Mark Douglas has amazing book out there called Trading in the Zone. If you haven't read it, it's brilliant. Louise Bedford on TradeDelicious has some brilliant trading psychology content. There are probably another 4 YouTubers that I can think of off the top of my head that have literally been cornerstones to my trading mindset and psychology. How much time do you spend working on that? Because the only reason you don't need to work on it is if you can rock up every single day and say, hey, I execute my edge flawlessly. I never fear. I never greed. I never FOMO. I never extend my stop loss, extend my take profit. I always execute on the right account and I have absolutely 0 issues within my trading. If you do that, you are by far the best trader I have ever met. All you need is a good profitable edge that works with consistency. And it's like trying to find a needle in a haystack. So balance, life balance. I think that's what we can take from this.
Yeah, absolutely. I think that, as we little self-promotion here, right? We talk about these things on TradeDelicious. We harp on, yes, like, sure, there's like, you don't hear us talk about like what strategy we use, how we use it, and all that stuff, because that's not what we're here to teach, right? And the strategy, that's one thing. We could talk about what we like, right? But you really have to talk about what you like, how you see markets best, and the only person who's going to help you find that is you, right? But what I love about TradeDelicious and what I like about what we do here, we provide you tools that help round you out as a trader. I think, Mind Over Market series with Louise Bedford is a prime example of the things that we should be working on that aren't as fun to work on, but we should be working on so that we can know ourselves. And you know what? The dividends of that are actually going to pay out beyond trading. You're actually going to be better at just humaning, if that's a real word, right? Like you're going to be able to go out there and know yourself, know what makes you tick, know what makes you happy, know what makes you kind of like upsets you a little bit. And like you're going to have to do some hard work in order to get over yourself. and get over yourself in a positive way so that you can know yourself and know how you trade more effectively. Because again, not everybody's a scalper. Some people are better position traders and they're better mentally equipped to position trade. Some people are better scalpers. Like wherever you're at emotionally, I think knowing yourself really drives home the point of being able to be a more effective trader, which is all we want to be, right? And at the end of the day, that's all we all want for everybody is to make money. That's all we want to do in these markets. So
but
just
hang on,
look
but
at your
recognize that it's okay to lose. It's okay to lose. If you can take one good trade and you lose, you lost like a winner. And that's what we've got coming up next for you on Futures Focus. Stay tuned. We're going to take a 30-second break. We'll be straight back.
We're going to make some money today. I'm going to try and make some money today.
I've gone to the top-down analysis.
All these levels that I drew in is straight. We are trading right within value. Would make you feel much better.
They're forecasting a little bit of an upside.
It's been a monster move. So don't worry, Rich. I took it for you. It's going to be a little bit more aggressive
And how I go about the analysis.
Talk about. I was just under $500 away from the target and I ended up losing things, but this is a great opportunity. This is a great opportunity to share about things that I learned and how you can learn from my mistakes and hopefully not repeat them. So let's hop right into it. This video is really going to be focused on 3 key points that you can use in your trading to improve your trading and not do what I did, which is blow up on a funded account. And towards the end of this video, I'll reveal the next account challenge that I am doing in order to improve my trading. Let's hop into it. The first point, then the most important, most likely, is just the issue of pride coming before the fall. Literally, the day before I started performing poorly, I was speaking to Jordan, and we were having a great conversation about how the challenge was going. I was incredibly excited. I told him I was going to be making a recap video once I hit the target because I was just $500 away. And the reality of it is I usually make that in 2 days when I'm trading just a single contract, which is what I was doing on this particular challenge. Well, the following day, I did not perform well. In fact, I performed incredibly poorly. I went from being up around $2,500 to being down $1,200. So I lost $1,200 within a single day. And so I was only up $1,300 from that point. I took a couple of days off, traded my personal account, traded my other accounts. Everything was going great. I'm thinking we can return back to the challenge. I returned back to the challenge and then lose $855, which takes me over the $1,500 drawdown limit in that particular funded account, making me lose the account, sending me down a little bit of a negative headspace. I've been trading 7 years now, and sometimes when it comes to profitability, it isn't something that I just expect. It's something that I believe is a given. With experience comes confidence, but if you allow that confidence to extend too far, that confidence becomes arrogance, that arrogance becomes pride, and pride comes before the fall. The next piece of the puzzle is it's okay to take a day off. As traders, we come here to make money. That is the first, second, and third thing we are focused on when we're trading, and that is completely understandable. No one comes to the markets just because they like to see candles go red and green. We all come here for a purpose, which is to grow our personal accounts, and for many of us to obtain that financial independence that we so intensely desire to achieve. Well, it doesn't always work that smoothly. Sometimes when we focus a little bit too much on the money, when we focus too much on a goal, when we put time constraints on ourselves that are too intense, sometimes that can lead to us making poor decisions because we're too focused about the dollar amount. In trading, we have to focus on being better traders, being better plan creators, being better risk managers first and foremost. As we begin to lose track of those items, lose track of risk management, lose track of our center, which is being a better trader and trying to just be a money maker, that ironically is when we start to lose money. The third piece of the puzzle deals with cognitive fatigue. Cognitive fatigue is a very real thing that affects everyone that does anything difficult that happens cognitively. Obviously, trading is 90% in your head, 10% on the chart, so there's a lot of cognitive work that is being done as we're trading. As the day goes on, if you're a scalper like me and you're trying to take multiple trades throughout the day, chances are you're experiencing a lot in the way of cognitive fatigue as time continually passes, as you place more trades time and time again. Well, one thing I didn't do well during this challenge was manage my cognitive fatigue. What happens when I take 5 trades, 6 trades, 7 trades, 8 trades is, generally speaking, I start to see the market a little bit differently. Things become a little foggier. It's harder for me to recognize the overall trend. It's harder for me to recognize the pullbacks that I need to be getting in on and the ranges that I need to stay out of. So when thinking about cognitive fatigue, when thinking about how you trade, lowering the amount of trades that you allow yourself to take is definitely a place that I could do better in, and so many traders could benefit from. Because as the time moves forward and we get fatigued, we don't perform well. Now, I just gave you 3 points that I need to work on in order to be a better trader, and I hope that they help you as well. But the question is, what are we going to be doing from here? How do we take steps forward into the future? This is futures focused. The whole point of the show is to really point us towards a better future, a more profitable future. So what will I be doing? I'll be doing something a little counterintuitive. I'll be actually raising my account size, raising my trading size, and I'll be raising the total value of the challenge along with raising the days in the challenge. That challenge is going to be 15,000 in 60 days. Why is it that? Well, when I was trading previously, I traded on a $25,000 account. The rules in that particular account, this is all through Apex, you can find this stuff online, is $1,500 profit target, $1,500 in trailing drawdown. $1,500 per one contract is a little tight for the way that I trade. So I needed to widen that horizon a little bit and make a better system. One thing I think I did poorly in the last challenge was I didn't trade at the actual size that I usually trade at. I tried to keep things incredibly small. I tried to keep things incredibly tight. $25,000 probably shouldn't go above one contract, so I stuck to one contract. Well, throughout the past few months, I have raised my size consistently as I've performed well in my other accounts. So, after conversations with some of the brilliant people on this channel, after listening to people like Louise, talking to people like Rich, and hearing different ideas from Jordan, from Boris, from David, I have decided to raise my size multiple times throughout the year. That has gotten me to 3 contracts on my accounts not related to the challenge. 3 contracts is where I feel comfortable, and that's probably where I should stay at. So, in order to keep that idea going, I decided to raise the size of the accounts that I'm looking to trade in my funded accounts. I got rid of my $25,000 funded accounts just because the size was a little too small. The trailing drawdown was a little bit too small. So now I'm looking at trading just $250,000 accounts, which has a $15,000 profit target and a $6,500 drawdown. $6,500, 3 contracts, that's roughly $2,166 in total drawdown per contract. That gives me a little bit more room to grow, and that gives me a little bit more room to take the trades that I really need to take and hopefully not add to that cognitive fatigue that I was talking about earlier. To be 100% clear, one thing I think I didn't do well during my last account challenge was the fact that I didn't lay out super clear rules, not just for you guys, but for myself, that would allow me to trade this account much more so like my personal accounts. So what will I be doing differently? I will be maximizing my size, but I'll be having a limit at how much size I can have per trade. I'll be maximizing things, and I will not allow myself to go over 3 contracts when I am trading in these markets. 3 contracts is a solid number for me. On average, I am winning on average $149 per trade. I am losing right around $83 per trade. And so multiplying those numbers by 3 keeps me really nice and comfortable, about $450 per trade on average when I'm winning, $240 when I'm losing. That's almost a 2-to-1 ratio when you look at my statistics since April, even with all the drawdown that I have seen throughout these past couple of weeks. So keeping those numbers like that, I think that will keep things solid. And over the course of 60 days, as long as I am continually trading the way that I have been trading and seeing my statistics remain consistent, then there's no reason why I can't hit my $15,000 target. Number 2 rule that I'll be looking at is having a daily loss limit that's a little bit cleaner. In my personal trading, I've never had a daily loss limit that worked well. Usually if I say I'm going to lose a maximum of $1,000, the next day I lose that maximum of $1,000. Maybe it's a self-fulfilling prophecy. Maybe it's something mental that I need to work on with the trading psychologist. I don't know. But when I have a daily loss limit that is connected to dollars and cents in that way, I have a tendency to hit it the day after I set that daily loss limit. So what do I do instead? Instead, I just take a look at how many losing trades I've had back to back to back. If I have had 3 full losers back to back to back, in other words, if I have 3 losers that hit my stop loss as opposed to me cutting things prematurely before it hits my stop loss, then chances are that's not going to be a good day in the markets. I need to cut bait and I need to continue on with my day, go on a walk with my dog, do anything outside of trading. The third rule that I'm going to have in order to improve my trading and improve my system, improve my abilities to hit these targets is I'll be focusing on having no more than 6 trades in this account. Generally, I'm pretty loose with the amount of trades that I'm allowed to have. On average, my trades are quite quick, a minute, 2 minutes. The longest trades I've had this year have been to the degree of 14, 15 minutes. So I'm very comfortable trading 12 times within a day without having too many issues. However, my statistics don't necessarily agree with where my comfort is. My comfort says 12 trades is fine. My statistics say anything over 6 and we're probably doing a little too much. My most successful days during this challenge and really throughout the whole of the year have been days where I have 1 or 2 trades. Usually that first trade is a small winner or a small loser, and that second trade is a massive winner. That's the only way that I've been able to remain profitable over the past couple of years, not by having consistent large winners, but by having very small losers and by having decently sized winners. So I know I do my best when I'm cutting trades quickly and I'm allowing for my winners to run for as long as possible. So what does that mean? That means I need to be more selective with my trades. I need to push myself to cut things very quickly and for allow those big boy trades to run for as long as I can allow them to run. And that will mean trailing stops as opposed to having set profit targets. That's the core of how I'll be changing things during this particular challenge. What do you guys think? Do you guys think that I'm a little insane for taking things in this direction? Do you guys think that I should start with a different size? What's your opinion? We want to hear it. We want to hear where your head's at with these things. If you want to join me on this challenge, please feel free to do so. I will be posting all of my updates within the Discord, and I will be updating you guys with daily videos on where we're actually at. I'm super excited to get this ball rolling and to share some stuff with you guys that hopefully makes you better traders. As always, can't tell you how much we appreciate you guys here at TradeDelicious. It is a pleasure to be able to talk about this stuff in front of you guys, to share some of vulnerability and hopefully help you guys to do the same. Whenever we trade in community, there's a real opportunity for all of us to grow. So I encourage you to make a video, to write a post, to share with a group of people that you trust your successes and your failures in trading, because that's the only way that we can grow, by having third parties, by having friends that care about us, take a look at our trading with a different pair of eyes and say, I'm noticing this, I'm noticing that. That way we can improve. As always, for the rest of the day, for the rest of the month, for the rest of the week, for the rest of the year, please trade well and trade delicious. I'll see you.